We live in a world that's always on the move. More stuff, smaller spaces, shorter leases. As cities grow and lifestyles change, one industry quietly became essential: self-storage. It's not glamorous, it's not flashy, but it's everywhere, and it's booming. At the heart of this transformation is a company most people drive past without a second thought. Yet it's reshaping how America lives, moves, and stores. This is the story of Extra Space Storage, and how it cracked the code to turn concrete boxes into a multi-billion-dollar empire. But it's also a story about us, how we live, what we keep, and what that says about the future. In 1977, against the backdrop of Utah's rugged terrain and rapidly urbanizing communities, Kenneth Woolley, a Brigham Young University professor and real estate entrepreneur, founded Extra Space Storage Inc., with a vision to transform the fragmented, mom-and-pop dominated self-storage industry into a professionally managed, customer-focused enterprise. At a time when storage facilities were often considered low-end and unregulated, Woolley saw an opportunity to elevate the business model through scale, standardization, and operational excellence. Initially operating under various local entities, Extra Space Storage focused on acquiring underutilized or distressed storage assets in high-demand regions, primarily across the Intermountain West. Woolley and his early team emphasized site selection, often targeting locations with strong population growth, limited zoning for storage, and barriers to entry. The company's growth model revolved around prudent acquisitions, ground-up development, and long-term property management agreements that provided recurring income without heavy capital requirements. By the mid-1980s, Extra Space had developed a small but efficient network of branded storage properties across Utah, Arizona, Nevada, and California. Each facility featured paved access roads, enhanced security measures, and clearly segmented unit offerings. Features that were rare in the industry at the time. Woolley was an early adopter of centralized management systems, which enabled consistent customer service, pricing strategies, and cost controls across locations. As the company expanded into new markets through the 1990s, it also began building relationships with institutional investors and real estate developers, laying the foundation for future joint ventures. Extra Space refined its operational model to include a hybrid approach, owning a core portfolio of high-performing assets while managing third-party properties under the Extra Space brand. This dual structure allowed for growth with minimal balance sheet risk while reinforcing the company's presence in key metros. By 1998, the company had officially rebranded its operations under the Extra Space Storage name and was managing more than 50 facilities across multiple states. With a growing team of real estate professionals, finance experts, and marketing strategists, Extra Space was transforming from a loosely affiliated group of storage investments into a cohesive, scalable operating platform. The leadership team began exploring the long-term benefits of converting into a REIT, setting the wheels in motion for a future public offering. By the early 2000s, Extra Space Storage had matured into a well-capitalized, professionally managed storage operator with a growing national footprint and a reputation for disciplined growth. With over 200 properties either owned or managed and a proven operating model, the company was well-positioned to take advantage of rising institutional interest in alternative real estate assets.
Say, you know what can we do to do our part? And on energy efficiency, because our units are typically not occupied, what we have tried to do is make sure that the dimmer switches, the motion activated switches, and the lights throughout the facility are only activated when someone is actually in the facility.
Under the leadership of CEO Spencer F. Kirk and President COO Carl Haas, both of whom joined the executive team in the years leading up to the IPO, Extra Space initiated plans to convert to a real estate investment trust, REIT, and enter the public capital markets. On August 17, 2004, Extra Space Storage formally launched its initial public offering, IPO, on the New York Stock Exchange, listing under the ticker symbol EXR. The offering consisted of 14.4 million shares of common stock priced at $17.50 per share, raising approximately $252.5 million before underwriting discounts and other expenses. The IPO was underwritten by a syndicate led by Goldman Sachs, Wachovia Securities, and Merrill Lynch, who helped position Extra Space as one of the first storage-focused REITs to enter the market in the post-.com era. The proceeds from the IPO were used to repay debt, acquire new properties, and strengthen the company's capital base. In preparation for going public, Extra Space also underwent a corporate restructuring, consolidating numerous privately held entities and partnerships into a single, streamlined REIT structure to comply with public company regulations and investor expectations. This move enhanced transparency, reduced tax inefficiencies, and aligned the business for scalable growth. The public debut of Extra Space was not only a financial milestone, it was also a symbolic turning point in how the self-storage industry was perceived. Historically considered a niche or secondary asset class, self-storage was increasingly being recognized for its recession-resistant fundamentals, high margins, and low overhead. Extra Space's successful IPO helped validate this narrative and encouraged further institutional capital to enter the sector. With new access to the public markets, Extra Space accelerated its expansion strategy. The company began targeting larger, higher quality acquisitions in top-tier metropolitan areas, expanding its internal development pipeline and scaling its third-party management platform. Investor confidence was buoyed by the company's operational discipline, strong occupancy metrics, and strategic focus. From this point forward, Extra Space operated with a dual mandate, driving long-term shareholder value while delivering reliable, customer-centric storage solutions in markets across the United States. However, the 2008 financial crisis introduced significant challenges that tested Extra Space's resilience. While many companies scaled back or struggled, Extra Space doubled down on its commitment to operational excellence and financial discipline. The company focused on optimizing its existing portfolio, strengthening its balance sheet, and pursuing cost-saving initiatives. This focus on cash flow stability allowed the company to weather the economic storm, as demand for self-storage remained relatively stable during the downturn. By 2010, Extra Space had emerged from the crisis in a stronger competitive position, having preserved its growth trajectory while many of its peers struggled. A defining moment came in 2015 with the $1.4 billion acquisition of SmartStop Self-Storage. This landmark deal added 121 owned and 43 managed properties across 17 states, significantly expanding Extra Space's presence in key metros like Southern California and the Carolinas. The acquisition also brought operational expertise, advanced marketing practices, and a tech-savvy customer base that seamlessly integrated into Extra Space's growing platform. During this period, Extra Space also became a pioneer in using technology to enhance operations and improve customer experience. The company developed an innovative dynamic pricing engine that used real-time market data to adjust rental rates and maximize occupancy, similar to pricing models in the hotel and airline industries. This allowed the company to optimize revenue per square foot, even in highly competitive markets. Extra Space's focus on digital infrastructure drove further operational efficiency. It introduced mobile-first booking systems, enabling customers to reserve, rent, and pay for storage units directly from their smartphones. Self-service kiosks were installed at key locations to streamline the rental process, and AI-powered chatbots and centralized call centers provided scalable customer support across its national network. By 2020, Extra Space was a leader not only in self-storage, but also in the technological transformation of the industry. The company's growth model, fueled by strategic acquisitions, operational excellence, and digital innovation, set a new standard for the sector, establishing Extra Space as a forward-thinking, tech-enabled REIT poised for continued success. In July 2023, Extra Space Storage achieved a historic milestone, solidifying its leadership in the self-storage industry with the completion of a $12.7 billion all-stock merger with Life Storage Inc. This transformative deal created the largest self-storage operator in the United States, significantly expanding Extra Space's market share and operational scale. With the addition of approximately 270 million square feet of rentable storage space, the merger dramatically expanded Extra Space's capacity to serve 100+ million customers annually. The expanded portfolio included key properties in high-growth metro areas and reinforced Extra Space's presence in the Sunbelt, Midwest, and Northeast regions. This market consolidation not only enhanced the company's brand recognition, but also provided new opportunities for innovation and service differentiation. By 2024, Extra Space had fully integrated Life Storage's assets, creating a more robust and diversified platform. The company's ability to integrate such a large-scale merger without disrupting operations was a testament to its strong management team and scalable infrastructure. The merger also underscored Extra Space's market leadership and long-term commitment to value creation for shareholders. As the industry leader, Extra Space now controls a larger percentage of the self-storage market, making it better positioned to weather economic fluctuations and capitalize on emerging trends. As Extra Space Storage looks to the horizon, one thing is clear: the journey is far from over. With over 4,000 locations and 270 million square feet of rentable space, this self-storage giant has already revolutionized the industry. But what happens next? Will they continue their expansion and embrace game-changing technology, or could new disruptors challenge their dominance? Will Extra Space continue to dominate, or are we on the brink of witnessing the next major disruption in the market? If you're as curious about the future of storage and technology as we are, make sure to like, subscribe, and hit that notification bell. You won't want to miss what's coming next.